Well, hey, I'm very excited to have the newest edition of these real estate questions revealed. Today, we're going to talk about FHA loans. So I'm very excited to have our next guest with us. I'll let her introduce herself, but works with a great company. Has an okay dad. Just kidding. But yeah, why don't you go ahead and introduce yourself?
Well, hello, everybody. My name is Laiken Hobbs. I am the newest addition to the GoPrime Mortgage family located in downtown Ashland. I obtained my mortgage license back in November. So I've been learning the ropes, and I got into the mortgage business because my dad, Tom Hobbs, has been a loan officer in the area for over 20 years. So that's kind of how I ended up in the mortgage business. It was never my plan, but I'm very happy with my decision and my career path. So I'm very excited to be here.
Great. Yeah. And I think what I thought it would be cool to have you come in and really talk about the FHA is because you've really been in the weeds with getting your license and probably maybe even getting a little bit further into learning the requirements and things of that nature. So you might have a good, unique perspective for somebody that is getting that loan. So, um, can you kind of just start off with really talking about what exactly is an FHA loan? What does that mean?
Well, I think it's important to first start with the fact that the FHA stands for the Federal Housing Administration. I know there's a lot of terms used in mortgage that can kind of seem scary or unknown if you're not in the mortgage business. I think that when I first started, it kind of felt like foreign language. So I do want to point that out. And FHA loans are mortgages that are going to be issued by an FHA approved lender. So these still come from banks, but these mortgages are insured by the FHA. So that's why sometimes you're going to hear them referred to as an FHA insured loan.
Yeah. And I think another interesting point to bring out is I think a lot of times people will tell me, from my perspective, they're like, "Oh, I'm a first-time home buyer, so I want that first-time home buyer program." I know they're talking about FHA or
Right.
USDA
Yeah.
or something like that, but can you clarify what exactly who can qualify for an FHA loan? It's just not for first-time home buyers, right?
Right. So there actually is no like first time home buyer program. It's just a great program for a first time home buyer. I mean, it still has its positives and its drawbacks, just like any other type of loan. I think where you were talking about unique perspectives, I think this is a loan that is very good for, younger people, people my age who may have more debt because I know we're going to be talking to about debt to income ratios, but you are able to have a higher debt to income ratio with an FHA loan, and then you can also have a lower credit score than some of the other popular mortgage programs.
Well, yeah, and I think that kind of leads me to my next question, which is, can you talk a little bit more about what are some of the benefits of the FHA loan versus maybe a conventional loan, which most people are, they think of conventional, they think of the 20%. We have another whole lot of talk on that, but can you talk about
Right.
the differences between the two?
Yes. So an FHA loan, it requires a 3.5% down payment. And that is with a FICO score as low as 580. Now, you can obtain an FHA loan if you have a credit score between 500 and that 579 area with a 10% down payment. Conventional loans, we're looking more, I mean, there is some cases, a lot of things are situational,
Sure.
but we're looking at least a 3% down payment up to a 20% down payment. So these funds can be a gift with an FHA loan, but that is not the case with a conventional loan. And then also with an FHA loan, this can be a gift of equity, and it can come from your savings account as well. And then another thing that we will, I'm sure, move into is the topic of mortgage insurance. So FHA loans do have different mortgage insurance standards in comparison to conventional loans. So.
Yeah. So you touched on it there briefly in regards to the credit scores. So typically, credit scores, most FHA, they want to see at that 620 level or above, right? So
Right.
can you
Yeah.
kind of talk about what some of the differences are and how you can get maybe the lower credit score versus what happens if you have a 620 or above?
Right. So if you have, so FHA loans, you don't necessarily have to have a 620. You have to have a 580 with the 3.5% down payment. So, a conventional loan, you're looking more at the 620 area.
Yeah.
So that's kind of where that is at with the credit score. The main difference, from my perspective, I think, with the FHA versus the conventional, is your debt to income ratio can be higher. And I know a lot of younger people may have student loans, which is a big factor into that debt to income ratio. But then there's also situations where your debt to income ratio can be higher with an FHA loan if you have that higher credit score. So again, it's very situational, and it can be hard to explain or understand if you haven't been in the mortgage business for a little bit.
Yeah. So to circle back to the debt to income ratio, one of the things I'm asking, each of my lenders and each of the people that we're talking to is give your definition of what the debt to income ratio means, because people hear DTI, they hear these different things and they're like, yeah, what? So can you
Yeah.
kind of explain what, in your terms, what debt to income ratio means?
So I think it's best to break it down with an FHA loan. So whenever you apply for an FHA loan, you want your housing income ratio to be at 31%. So this means you want your mortgage payment, your principal, your interest, your homeowner's insurance, your mortgage insurance to be 31% of what you bring in each month. So then also with FHA loan, we look at a 43%, and this is going to be your housing ratio, that what we just talked about, plus any other debts that you may have, whether it be car, your credit card debt, your revolving credit, if you have a boat, your student loans, anything of those matters. So we want to keep your total debt to income ratio at 43%.
And that's factored off gross, right?
Yes.
Yep. Okay. So do all homes qualify for FHA, or there, because I know, especially with like USDA and FHA, they have some special requirements. Can you talk to that?
So an FHA mortgage requires kind of a more extensive appraisal. The appraiser has to be FHA approved. So there's a lot of little tedious things that FHA requires. For example, I know if you have, so many type of steps in your house, you have to have a rail. So there's like some little things that come in with the appraisal. Also, the Department of Housing and Urban Development, they set standards on the pricing that an FHA loan can be. So depending on where you live, I believe if you're in the Ashland area, a house around between $400,000 and $500,000 is probably not going to qualify for an FHA loan. But you can always, Google search that, and on HUD type in your county, your state, and it'll pull up those limits. So that is one thing that may not allow you to have an FHA loan. But for the most part, more people are able to obtain those in comparison to a USDA loan.
Yeah, and the big thing that I think is important with that is that the FHA program is primarily set up for properties that are move-in ready. They may need a few things aesthetically, but they're not fixer-uppers. You can't
Right.
buy a
This is not a
foreclosure type of home and then turn
right.
around and use the FHA.
Right.
I want to talk a little bit more about mortgage insurance, and I want you to explain and define mortgage insurance, how long it's on there, does it ever drop off, what exactly is it, why is it on there?
Right. So I feel like it can get confusing whenever you start talking about numbers. So with an FHA loan, there is two types of mortgage insurance. You're first going to have your upfront mortgage insurance premium. This is just a one-time fee. You can put this into your mortgage, your loan amount, or you can pay it at closing. That's a pretty flexible thing. But it's going to be a fee of 1.75% of your base loan amount.
Okay.
So, there is no escaping that. You're going to pay that. So next you have your monthly insurance premium. Typically, and I say typically because, it can go anywhere from 0.45% to 1.25% of your base loan amount. but it's typically 0.85% of your base loan amount. So if you take your base loan amount times 0.85%, you're going to get that number. You're going to divide it by 12, and that is what you're going to pay for each month.
Okay.
So this does not drop off. There's only one situation where your mortgage insurance premium is going to drop off, and that is if you put 10% down on an FHA loan, and then it will drop off after 11 years. So it doesn't matter if you get an FHA loan and you put down 40%, you're still going to be paying that monthly insurance premium for those 11 years. And if you put down anything less than 10%, you're going to be paying that for the life of the loan.
Okay. Interesting.
Yeah.
All right. Yeah. So what is something that you wish people knew about the FHA loan that maybe is a misconception or a question that you all get often that you just would like to get out there so it can become common knowledge a little bit?
I think that a lot of people don't know that it's only a 3.5% down payment, which is really great. I think that a lot of people, and it's perfectly fine. It's perfectly common that people don't really know a huge difference between an FHA and a conventional loan. But whenever you're talking about those monthly insurance premiums, if you're going to put down 10% or more, you might want to go with a conventional loan, which is going to give you a better rate with your private mortgage insurance on a conventional loan. So maybe just the difference between the two. And I think a lot of people may be scared to ask questions, and buying a home can be really scary. It's a huge investment. So definitely I just wish people asked more questions and didn't necessarily just jump into a program just because it, sounds so shiny and new at the moment.
Yeah. So, and maybe you answered that with the last, or answered this question with that statement, but I was going to ask, what do you think is the best advice that you could give someone that is trying to decide which type of loan best fits their needs?
Well, I think that in some situations, you're going to have people who need to buy a home, right now at the moment. And an FHA loan may be the only option for them at the moment. But if it's not, I think it's perfectly fine to take some time and work on your credit. And, there's a lot of mortgage loan officers in the area who are going to help you with that. And they're going to work with you to get that credit score up to pick the product that is most beneficial for you. So I guess, just don't jump into it unless you absolutely have to at the moment.
Yeah, because I always tell people it's you really want to be with somebody as far as a lender that you're very, very comfortable with and you feel like's looking out for your best interests, because there is a lot of questions. There is a lot of, anomalies. We're trying to touch and give them a lot of good base points about the different types of loans so they know what questions to ask. But it's really important to make sure that you're talking to the lender and they're looking at all options so that way you can make that decision more informed.
I think it's definitely important to find a loan officer that you connect with and that you trust too. So kind of based off what you had just said.
So to kind of finalize this and wrap it up, it's not necessarily just for FHA loans, but in general, what do you think people can do to set themselves up to be the most successful as possible whenever they're going into getting a loan for a home?
Well, I think there are some situations where, we have clientele, or I'm sure this is everywhere, where they get angry because the process is slow. A lot of the process comes from the buyer being prepared. So, you have extensive documentation, your W-2s, your tax information, your pay stubs, your verification of employment. So I think the best advice is to definitely be prepared. And whenever your loan officer asks you for documentation, maybe don't wait just a few days to give that to them. The sooner the better.
Yeah.
And that way we can, move the process along. And, when people want to buy, they want to get in the house. So that comes from the buyer's side as well, not just the loan officer side.
Yeah, no, exactly. That's one of the things I definitely tell everybody is that
Right.
there's some things we don't have control over, but the ones that you do have control over, if you draw that out, guess what? We've just added some time to the end.
Yeah,
So,
it's definitely going to take a little bit. So,
yeah.
okay.
Well, great. Well, thank you very much. I think we've gotten some great information from this, and certainly, we encourage people to either reach out to myself or reach out to your lender and ask the specifics. We hope this has kind of gave you some good information to spur that. But, again, go ahead and remind everybody who you are, how to get in touch with you, maybe a phone number or a website, and that way they can reach out to you directly as well if they have questions that they may want to ask you.
Oh, okay. Well, again, my name is Laiken Hobbs, and I'm really excited that I got to do this today. So thank you again, Ryan. You can reach us on our Facebook at GoPrime Mortgage Inc. You can also reach us at GoPrime.com. You can also text our branch manager, which is my dad, Tom, at 606-571-6611, or give him a call. And then my cell phone number is 606-922-2648. So we would love to help you with anything you may need. We're here. Yep.
Great. Well, thank you all very much. And again, guys, if you all need any help, any assistance, or anything they can do, feel free to reach out to Laiken or Tom or myself. And thank you again, and look forward to talking to you all soon.
All right. Thank you.
Thanks.